All right, let's jump right in and take a 5-minute look at the financial story behind Qfin Holdings, ticker symbol QFIN. We're going to dig into some really interesting numbers here that seem to scream high performance, but also low price. So what's really going on? Let's find out.
Okay, before we get into the thick of it, just the quick and necessary disclaimer. This is all for informational purposes. It is absolutely not financial advice. Please do your own homework before making any investment moves.
So what's the big deal with Qfin Holdings? Well, on the surface, it has all the makings of a classic value play. You're looking at a company with a high dividend that also seems to be trading way below what it might be worth. But you gotta ask, is it too good to be true?
To get our heads around this, here's the plan. First, we'll cover what Qfin actually does. Then we'll look at its growth and check its financial health. After that, we'll get into the dividend story before we tackle that big question. Is this stock really undervalued?
Okay, so first things first. Who is Qfin Holdings? Well, it's a nearly $4 billion player in the consumer finance space. That's the world they live in, and it's the backdrop for everything else we're about to look at.
All right, let's get into the company's track record. Now, past performance doesn't guarantee future results, but in this case, it tells a pretty compelling story.
Okay, so check this out. Qfin's growth has just gone into overdrive. I mean, its 5-year average was already a solid 10.1%, but in the last year alone, it skyrocketed to over 51%. That doesn't just crush its own history, it completely blows past the industry average of about 33%. That's some serious acceleration.
And look, this isn't just a one-off fluke. The analysis actually calls Qfin's earnings high quality, which basically means this growth is built on something real, not just some accounting wizardry. The key thing to see here is that the company has been powerfully and increasingly profitable.
Okay, a great growth story is awesome, but what's under the hood? Is the company actually financially healthy? Does that balance sheet look strong? Let's take a look.
And the answer seems to be yes, it's pretty solid. The company's short-term assets, stuff that can be turned into cash pretty quickly, are sitting at over 54 billion yuan. Get this, that number alone is more than enough to cover all of its debts, both short-term and long-term. That is a really strong position to be in.
Now let's talk about debt for a second. The company's debt-to-equity ratio, which is just a way of comparing what it owes to what it owns, is 28.4%. Now that's not crazy high or anything, but it is something to keep an eye on, because that number has been creeping up over the last 5 years.
But, and this is a big but, there are a couple of things that really take the sting out of that rising debt. First off, they're sitting on more cash, over 10 billion yuan, than their total debt. And on top of that, the money they make from their day-to-day operations covers their debt by more than 150%. So yeah, debt has gone up, but they seem to have it well under control.
Okay, on to Section 4, the dividend. This is a huge part of the story for Qfin. It looks really attractive on the surface, but like a lot of good stories, there are a few twists.
First, the really good news. Qfin is paying out a dividend that yields a very nice 5.2%. To put that in perspective, that puts it squarely in the top quarter of all dividend stocks in the U.S. market. It's a significant payout for sure.
However, you knew there was a however coming, right?
So here are the catches. First, it's only been paying a dividend for 4 years. That's a very short track record. And even in that short time, the payments have been kind of jumpy and inconsistent. That's a bit of a red flag if you're looking for stability. But on the flip side, and this is a huge positive, the dividend is incredibly safe. They're only paying out about 20% of their profits. That suggests the dividend is very sustainable.
So all of this brings us to the million-dollar question. Is this stock actually a bargain? Let's dive in and look at this potential gap between the company's great performance and where its stock is trading today.
A really common way to see if a stock is cheap is to look at its price-to-earnings ratio, or PE. And wow, Qfin's PE is just 3.8. Compare that to its direct competitors who are trading at an average PE of 13. That is a massive difference.
And it's not just a fluke when you compare it to its closest friends. Even when you zoom out and look at the entire U.S. consumer finance industry, the average PE is 10.5. So Qfin is trading at roughly a third of the industry valuation. By this measure, it just looks cheap.
But what if we try to figure out what the company is truly worth based on the cash it's expected to make in the future? Well, using that kind of model, the analysis suggests the stock could be undervalued by a whopping 76.6%.
And finally, what do the professionals think? Well, if you take the average price target from 13 different analysts who cover the stock, they believe it could go up by nearly 75% over the next year. It seems like no matter how you slice it, the answer keeps coming back the same. The stock looks cheap.
So let's wrap all this up. What's the real story here? What's the core conflict, the central puzzle, when you look at Qfin Holdings?
Here's the picture. On one side of the scale, you have all these huge positives: insane recent earnings growth, a rock-solid balance sheet, that high dividend, and a stock that looks incredibly cheap from every angle we looked at. But then, you see this one little question mark on the other side of the scale. Future earnings growth is expected to slow way down to just 4.4% a year.
And that really is the heart of the matter, isn't it? The company has this fantastic past and a super low valuation right now, but the forecast for the future is much less exciting. So the question is, what does the market see? Is it correctly pricing in that future slowdown, or is it completely missing a huge opportunity right now? That's the puzzle for anyone looking at Qfin Holdings today.